This week, the crypto market did something that frustrated bulls and bears alike: almost nothing. Bitcoin barely budged with a 0.9% weekly gain, but beneath that flat surface, rotation into trending tokens like pudgy penguins and DEXy tells a very different story. Let's unpack what this quiet grind really means for your portfolio. Welcome to your weekly recap for the week ending July 24th, 2026. This was a week of consolidation, plain and simple. The total market drifted sideways as the majors posted single-digit moves in either direction. Bitcoin closed at $6,427, up just 0.9% over 7 days, while Ethereum edged higher by 0.15% to $1,864.12. BNB was the outlier among the large caps, slipping 0.4% to $561.96. Meanwhile, stablecoins Tether and USDC held rock solid at $1 with zero movement, reflecting a market parked in neutral. Bitcoin dominance held relatively steady as ETH modestly outperformed, a small hint of risk appetite creeping back. Overall, I'd characterize this as a mildly bullish but low conviction week. There was no capitulation, no euphoric breakout, just patient accumulation and light chop. The 24-hour figures showed slight red across the board, with BTC down 1.5% and ETH down 1.9%, suggesting the week ended on a soft note. When markets go quiet like this, it often signals that traders are waiting for the next catalyst before committing capital in a meaningful direction. Let's zoom into Bitcoin, which closed the week at $6,427 for a gentle 0.9% 7-day gain. This was textbook consolidation. Bitcoin spent the week trapped in a tight range, unable to muster the momentum for a decisive breakout above resistance, yet firmly defended by buyers on every dip. The 24-hour reading of 1.5% shows the week wrapped up with mild profit-taking, but nothing that threatens the broader structure. What drove this muted action? Primarily a lack of fresh macro catalysts. With no major Fed surprises and institutional flows steady but unspectacular, Bitcoin simply had no reason to move aggressively. Spot ETF activity remained measured, and on-chain data suggested long-term holders continued accumulating quietly, while short-term traders stayed on the sidelines. The key takeaway is that Bitcoin is coiling. Periods of low volatility like this frequently precede expansion. The question is only direction. Bulls will point to the resilient +0.9% weekly close as evidence of underlying strength, while bears note the failure to break higher. For now, patience is the name of the game. Ethereum quietly stole the show among the majors this week, posting a +1.5% 7-day gain to close at $1,864.30, modestly outperforming Bitcoin's 0.9%. That's a subtle but meaningful sign of rotation, as capital began favoring ETF's higher beta profile. The 24-hour dip of 1.9% mirrored the broader market's soft close, but the weekly trend stayed green. On the ecosystem front, the big story continued to be Layer 2 growth. Roll-up activity remained robust, driving fee revenue and reinforcing Ethereum's role as the settlement layer for the broader Web3 economy. Staking metrics held strong, with the validator queue stable and yields attractive enough to keep ETH locked up and supply tight. DeFi protocols on Ethereum saw steady total value locked, and the narrative around restaking and modular scaling kept builders engaged. The biggest Ethereum story this week wasn't a single headline, but rather the quiet compounding of network fundamentals. When ETH outperforms BTC even in a flat tape, it often signals that traders are positioning for the next altcoin cycle. Keep a close eye on that ETH-BTC ratio going forward. While the majors ground sideways, the real action played out in the trending tokens. This week's spotlight fell on DEX, CashCat, and Pudgy Penguins, three names that captured outsized attention and outperformed the broader market. DEX led the pack among DeFi-adjacent plays, drawing interest as decentralized governance and social trading narratives regained traction. When Bitcoin and Ethereum go quiet, traders hunt for higher volatility, and DEX delivered exactly that. Cashcat rode the ever-present meme wave, proving once again that community-driven tokens can generate explosive short-term momentum regardless of macro conditions. And Pudgy Penguins continued its remarkable transformation from an NFT collection into a broader consumer brand and ecosystem, pulling in both crypto natives and mainstream attention. The catalyst behind these moves? Rotation. With the majors offering little excitement, speculative capital flowed toward higher risk, higher reward opportunities. Are these moves sustainable? That depends on whether the underlying narratives hold. Meme momentum can vanish as fast as it appears, but projects with genuine ecosystem development like Pudgy Penguins tend to have more staying power. Trade these with discipline. Not everything glittered this week. Among the large caps, BNB was the clear laggard, closing at 561.96 with a 0.4% 7-day decline and a 1.2% drop over the last 24 hours. While the loss was small in absolute terms, it stood out against a market where both Bitcoin and Ethereum managed to finish green. The underperformance reflects a combination of light profit-taking and a lack of fresh catalysts specific to the BNB ecosystem. When there's no new narrative to drive demand, exchange tokens often drift lower as capital rotates toward whatever is trending. In this case, the speculative names we just discussed. Beyond BNB, the broader story was one of underperformance by relative inaction. Coins that failed to attract the rotational flows simply bled slowly against stronger assets. There were no dramatic crashes this week, no major exploit-driven collapses among the majors, just the quiet erosion that comes when attention shifts elsewhere. The lesson here is clear. In a rotation-driven market, being in the wrong asset at the wrong time means underperforming even when nothing dramatic happens. Relative strength matters enormously. On the news front, this was a relatively calm week, which itself helps explain the muted price action. Without a major regulatory bombshell or a headline-grabbing institutional announcement, markets lacked the fuel for a big directional move. That said, several developments quietly shaped sentiment. Institutional flows into spot Bitcoin products remained steady, reinforcing the maturing narrative that Bitcoin has become a permanent fixture in professional portfolios. On the regulatory side, ongoing discussions around stablecoin frameworks kept USDT and USDC in the spotlight, though both held their pegs flawlessly at 1.0 throughout the week. In the ecosystem space, continued Layer 2 expansion and DeFi protocol upgrades drove incremental adoption rather than explosive headlines. Importantly, there were no major hacks or exploits among the top protocols this week, a welcome sign of improving security across the industry. The absence of dramatic news is actually a story in itself. It reflects a market in a healthy digestion phase, consolidating after prior moves and building a base. When the next big catalyst does arrive, this coiled-up energy could translate into a swift and meaningful move.
The DeFi and NFT corners of the market provided some of the week's most interesting undercurrents. In DeFi, total value locked remained resilient, holding steady even as the majors chopped sideways. Ethereum's Layer 2 ecosystems continued to attract liquidity, and protocols like DEXI drew fresh attention as governance and social trading narratives gained traction. The trend toward capital efficiency and yield optimization stayed front and center, with restaking narratives keeping builders and traders engaged. Over in the NFT world, Pudgy Penguins was undoubtedly the headline act. The project's ongoing evolution from a simple JPEG collection into a full-fledged consumer brand, with physical toys, licensing deals, and mainstream reach, demonstrates how NFTs are maturing into durable intellectual property businesses. This is the kind of real-world bridge that gives NFTs staying power beyond speculative hype. Elsewhere, meme-driven tokens like Cashcat showed that community energy remains a powerful force in Web3. capable of generating attention even in quiet markets. The broader trend is clear. The most successful projects are those building genuine utility, brand equity, and community, not just chasing fleeting speculation. Watch these narratives closely. Looking ahead, several factors could break this consolidation wide open. First, keep a close eye on the macro calendar. Any surprises from central bank commentary or key economic data releases could inject volatility into a market that's been starved of catalysts. On the technical side, Bitcoin remains coiled around the $64,000 level. A decisive break above resistance could ignite momentum, while a breakdown could trigger a swift retest of lower support. For Ethereum, watch that ETH-BTC ratio. Continued outperformance would signal the early stages of an altcoin rotation. Token unlocks across various projects could add localized selling pressure, so monitor unlock schedules for any names you hold. The trending tokens, DEX, CashCat, and Pudgy Penguins, will be worth watching to see whether their momentum sustains or fades. Finally, keep an eye on stablecoin regulatory developments, which could affect broader market liquidity. Remember, low volatility periods rarely last forever. The market is coiling, and the next move could be sharp in either direction. As always, this is not financial advice. Please do your own research and never invest more than you can afford to lose. So what did this week teach us? The biggest lesson is that flat markets are not boring markets. They're opportunities in disguise. While Bitcoin's plus 0.9% and Ethereum's 1.5% looked unremarkable on the surface, the real action happened in rotation toward trending names like Pudgy Penguins and DEX. Traders who understood that capital rotates when the majors stall were positioned to capture outsized gains. The second takeaway is the importance of relative strength. BNB's 0.4% decline in a green week reminds us that simply being invested isn't enough. Being in the right asset matters. A common mistake this week was chasing momentum too late, buying into meme rallies at the top only to watch them fade. Discipline and risk management separated winners from losers. Third, consolidation is a gift for accumulation. Quiet, low volatility periods let patient investors build positions without the emotional roller coaster. The actionable insight for the week ahead: stay nimble, respect key technical levels, and don't force trades in a range-bound market. Sometimes the best position is patience. Let the market show its hand before committing your capital aggressively. Preparation beats prediction every single time. If this recap helped you make sense of the week, smash that like button and subscribe to Aurelian Wealth so you never miss our weekly breakdowns. Drop your predictions for next week in the comments. Will Bitcoin finally break out of its range? We'll see you in the next one. Stay sharp and trade safe.